The views expressed in this video presentation are my opinions and not necessarily the opinions of guests and others sharing or reposting this video. The content is produced only for educational and informational purposes. Do not regard any statements in this video as a recommendation to buy or sell any financial instrument. Investing comes with risk to loss of principal. Always conduct your own research and seek guidance from a professional investment advisor. I am not a professional investment advisor. I'm Dollar Will. Let's make some money. Let's see. You guys know I deal with the dollar. It's all about the dollar. It really, really is. Of course, for some perspective, just to run through it, you should know it by now. The dollar has been rising since 2011. Okay, so we got that. There's a peak around December of 2016, which is around here. That's where we're going to zoom in now. Okay, so that's it. Well, actually, no, it's the wrong one. You know, sometimes the simplest things can be hard. Oh, duh. Right here. Here you go. So this red line is the line in the sand that will change, send ripples, you know, around the globe if the dollar takes out this high from December of 2016. This black line represents a resistance right in here, which we just can't. We broke through that resistance in the middle of April. Now, once we broke through, and so we got to a high right here, which we had not seen in 2 years. Okay, and when we broke through this high, as is usually the case, what was resistance becomes support. You see this red candlestick here. Um, it functioned as support there. The price went higher, and today we dropped right back down to the area. Now, although this stochastic on the daily chart suggests that we could continue lower to an oversold state, I believe this is going to be one of those exceptions, as it was here, where it dipped a little, then it kept moving kind of sideways, but the price kept going higher. So when you see it move down like this and the price go higher, that's called a divergence. So I think we where the momentum goes lower but the price goes higher, I believe we could see the same thing happen right here, where this momentum, we could have this momentum drop, but the price could actually go higher. And we're going to go after that price peak that I showed you earlier. Let's see. I want to go down to show you. We're going to zoom in on just this little leg right here. Let's start at around March 20th. Let's see. Actually, let me look at this. I'm putting up I guess this would be like a 6-hour chart. It's just a little cleaner. I believe that this 6-hour view is really more representative of what's going on and not the daily view. That we went from an oversold state, oversold state, back up to an overbought state, and decline in this general area of another oversold state, and that we go higher from here. That's what I believe is going to happen. Now I'm going to zoom in. We're just going to be concerned with this decline from here to here. Okay, this is the price high a week ago. That would be April 5 trading days ago, 7 calendar days, I guess. April 26th. You see the price went right back to that area. It dropped through it, maybe 2 or 3 uh, pips, but that's insignificant. A move that small, and then we got a violent spring up from that area and a violation of a trend line. You can see an imaginary line just define the resistance. So as soon as the price got to that area, it sprang higher. So what we're looking at is if the price will, let's say, come down to the oversold state and then turn and go north without making a new low, and in the process taking out these highs, which I expect to happen for the rest of the week. Now, if we go lower than this point, that will cause me to be cautious. And I am actually in this trade. I entered this trade around the 20th of March, and I've been holding it through this entire period. But if we go below this point, I will consider saving some of my profit and selling and getting out. But this dollar move is significant because it puts pressure on gold, oil. It puts pressure on the interest rate. Pressure to increase the interest rate uh, because the demand for the dollar will be so great from other currencies around the world purchasing the dollar. That move will create that demand itself will be a factor in the interest rate being raised, which I think is going to happen. Trump may not want it to happen. Nobody really wants it to happen because raising the interest rate while in the environment of a rising dollar, that suggests turmoil, and that is a counter to all of the optimism in the S&P and Dow, which I'm not buying. Let's see. We're going to take a quickly look at gold. I'm going to start here with the quarterly chart. Each one of these candlesticks represents 3 months. And what we have here is the beginning of the decline was starting the year 2011. Just looking at it, we see a big wedge looking pattern. And a wedge pattern usually is a continuation pattern, meaning the price narrows, the trading narrows at the peak, and then the price usually breaks down or breaks, and the price breaks in the direction of the prior move. The prior move was down. We're in this wedge. At some point, we're going to break through this line and continue going down. And this is my opinion. We're going to complete Elliott wave theory down moves to ABC patterns. I believe this is move A. I believe this is B, the high here. Kind of went sideways for a couple of years. And C wave is going to take us below this low. This is my reading of it. We'll see. What we have here is the stochastic chart showing us that this is the low in gold. That 2016 should ring a bell with you. I showed you the high in the dollar in late 2016. That corresponded with a low in gold in 2016. So as the dollar is picking up strength and continuing its rise, because the dollar is not completed its march higher since 2011, just as gold is not completed its decline since it began in 2011. We have the stochastic here showing us if the momentum flipped and went positive, gold rose, and then we have a flip right here. I'm gonna zoom in and show you where the stochastic momentum oscillator is telling us that it went negative. We also have the real body of the candlestick. The red part of the candlestick is called the real body. The wick, the little like the little dynamite sticks, the wicks coming out the top and the bottom. That I think is significant, but it's not as significant as the fat part, the real body. And so when you have let's say The next candlestick is different. In this example, we have what's called a bearish engulfing candlestick. The real body of this candlestick engulfs the real body here. So if you look at this green as optimism, and you look at this red as pessimism, the pessimism has engulfed the optimism. So it's and you have a flip verifying it on the oscillator, stochastic oscillator, and this is a quarterly chart. So each one of these is 3 months. So a move on a time frame as significant as a quarterly chart, it takes a long time to reverse the trend, reverse the direction on such a large time frame. So the movement in gold is lending credence to my position that the dollar has much higher to go. Okay, and let's see, I wanted to show one quick thing in the dollar, and you'll see this move here, this little mini rise since the 23rd, a little more than a week ago, kept making higher highs, and then all of a sudden, bam. Okay, the last 2 days, this big red candlestick, it gave up the ghost, and I believe we're going to continue going lower. You're going to see a flip here too. Okay, so stay tuned as the week continues. You'll see this continue going south, and you'll know why, because you listen to Dollar Well. Get a friend. Spread the word. Okay, now we're going to look at oil. The trend, the decline in oil actually began way back in 2008. Let's see. We got a bottom here. In what year? 2016. Now, this one actually bottomed in the beginning of 2016, whereas gold bottomed toward the end of 2016, and the dollar rose toward the end of 2016. So oil was actually kind of leading the dollar in this move. But again, oil and gold have an opposite or inverse relationship to the US dollar, generally speaking. So there's some small periods where that's not true, but it's so small that it's not even really worth mentioning. So we see here at this past Christmas, oil started to retrace from its high, its recent high of October of 2018. So we had a pretty violent move for 2 months, and then since Christmas to now, we talking, what is this, 4 or 5 months? 4 months, 4.5 months. So it's taken 4.5 months of a retrace to complete the retrace for a move down that only took 2 months. And that makes me think of the saying that common saying in trading, that prices take the stairs up and the elevator down. So down moves happen over a much shorter time frame. That is to say, the prices decline much faster than they fall. So these slow ascents with news every day telling you good news can create a false impression of what's really going on if you're not looking at the charts. That's why you can't, if all you're doing is watching the news, even if you watch the news every day, you still don't know what's going on if you're not looking at a chart, because you need to see the rate of the decline, not just and the steepness and depth of the decline, rise and decline. Not just, hey, it's been rising for a long time, or hey, I've been hearing good news about oil all this year. That doesn't mean anything if you're not actually looking at a chart, because again, it only took two months to create this amount of destruction. And even after 4 months, you still don't have a higher high and you have your momentum indicator that has flipped and gone negative. And this is a pretty significant duration of time for a chart, which is a weekly chart. So there you have it. Don't fight this. I wouldn't fight this move. With that, if I'm right, and I believe I am, about the dollar going higher, that will create negative pressure on oil. And this support we see here is going to be violated. And this momentum is going to pick up speed. And so now you know why. But when that happens, all eyes will be on this low, and this low. Now, how much might it fall? We don't know. It can get ugly. Okay. So yeah, so we got this saying one thing on a monthly. So someone that's bullish could take some confidence in this, but we're gonna watch it because this momentum could just as likely flip and continue going down, which I think it's going to do. But we will see. And you're already above this particular high point on the stochastic on the quarterly chart. So you know it's ready for a flip. So I am again bearish oil, making a lower low here, violating this line will, and then continuing to make lower lows with each candlestick. If that, I am negative as long as that happens. If we make a high above this peak, then I would have to change my view. And so let's say that I'm right and we keep making lower lows, then the monthly chart and the quarterly chart, those stochastic oscillators will end up flipped like this. So there you have it. That's my take on the situation. I would like to remind people that I have a Patreon site. If you would like more training in depth, it'll be much deeper than what I'm able to do here on YouTube. One, I don't want to give everything away because I have some people that support me, and they pay for the education. So I want to give a certain amount away because this information is crucial so that people can manage their retirement account. I couldn't live with myself if people got devastated in this decline, and I had some information that can help them. So there's a certain amount of free stuff that I will give you. And so just keep tuned in here. And as you see, I don't post videos every day. So when you see something from me, you check it out. Because I'm going to cue you in to these key technical areas where you need to focus. Now, if you want like I said, you want something more in depth, join my Patreon. My Patreon site is $10 a month, and that's cheap given the fact that these technical trading courses go from, the cheapest I've seen them is $400 or $500, and the most of them though fall around the $1,000 to $2,000, and some of them are even as high as $30,000 to $50,000. So $10 a month, that's nothing. And what I'm going to do this special on my page is, in addition to the private hangouts that I provide, I will, and that includes some private, private as in just for the Patreons, and then also private as in just for you one-on-one if you need it. And I'm also starting a paper trading group. So even if you don't have any money beyond the $10 and you want to learn in a simulated environment that is as close as we can get to the real thing, then you need to be on my Patreon page, paying the $10, getting the knowledge and putting it in practice in real time with a group of other people doing the same thing. And we'll learn from each other's mistakes. There are lots of different strategies out there, and there are many different oscillators. I don't trade them all. I can explain to you how they work, you are definitely likely to see some other methods that you like better than my method, and you'll be able to watch other people employ methods, maybe some different oscillators and some different strategies. It's different from the way you would trade. Some of the people invariably are going to be day traders. Some of the people are going to be swing traders. So you'll get a chance to see over time which methods will probably be more suitable to you. So for people who don't want to, I guess, commit to a $10 a month deal, and you just want to say, hey, Dollar, here's some money for a beer, you can hit my PayPal link. For people who just want to maybe have a consultation about trading, how to develop a trading curriculum for themselves, or whether they should be trading forex or stock or ETFs or the futures market or options, just to get a general understanding of the different options available to you as a trader, and just how much you can do with this knowledge. If you just want to talk for an hour, you can hit me up for our consultation, and you can see information about that in the description area. So I think that's all I got. I'm going to post another video maybe today, more than likely today, about the S&P 500, and because it made a higher high, but I'm not trusting it, and I'm going to show you why. In addition to this dollar movement, that's one reason, but there are other reasons. And I'm either today or tomorrow, I'm going to do a Bitcoin video. So that's that. Let's see. That's all I got.